I think that the next couple of months is still going to be a bit uncertain as we understand what the policies are and how they'll affect the Asian markets.
So, in the interim, what's the most sensible advice then? Stay light, stay cash rich. Don't go too far out on a limb right now. Don't place any big bets. Just wait.
I mean, if you're in equities, you've got to be reasonably fully invested. But I would be in safer assets and areas where you really understand the fundamentals and be prepared to trade. I mean, we've already had in emerging markets in Asia quite an underperformance versus the US since Trump was elected, and this year it's been a slightly unwound. Emerging markets in Asia have had quite a good start to the year. I mean, they were up nearly 5% at one point in US dollars, and partly because the dollar's weak. I expect that diminishes over the next month or two, and we get quite a trading pattern forming.
Interesting.
Sean, good morning. You are neutral on China. I just want to ask you how you would approach A shares. I mean, isn't there a case to be outright cautious or underweight, given the fact that leverage positions as a percentage of total market cap are higher than they have been since the mid-2015 crash? There's that. And also, the government may not necessarily be able to be the buyer of last resort because of where valuations are.
Yeah, I mean, the reason we're neutral on China is that we're seeing better data coming through, and we think that capital controls are so tight in China that we'll see a better figure when from the outflows, as in less outflows. And recently, since the dollar's weakened, the RMB has had a bit of a strength after weakening at the end of last year. We think that A shares are actually looking better value than H shares, partly because the premium that A shares had to H shares last year really unwound.